Well, hello everybody. Welcome to the midweek update. It is the 24th of September, getting towards the end of the month here. Let's see what we got when it comes to these markets. You know how this works. We are going to share trades with everybody. So take responsibility.
All trades and analysis in this video are for professional traders only. This video has been released to the public after a delay required by our compliance department. Maverick Traders received this market recap immediately, along with real-time trading support and resources. Maverick Trading is a proprietary trading firm that backs professional stock and options traders with firm capital. Our traders keep 70 to 80% of the profits they generate. If you're ready to become a professional trader, click the apply link in the video description below. Let's break down what happened in the markets today.
So let's take a look at our current outlook. We're still going to sit on that bull side, right? The monthly outlook, a pretty good surge to the upside, a very good surge to the upside. The markets look to be correcting over the last couple of days. We got the rate cut that we wanted. The comments out of the Fed were a little bit more dovish, a little bit more hesitant when it comes to future cuts, because we do see that sticky inflation, but the ideas behind it might not necessarily be that inflation with demand. It's not being caused by a growing economy, as we're seeing jobless claims, they increase, they go back and forth. ADP employment is slowing, things of that nature. But we have a very, very, very active consumer, which is why we've seen the Fed lean so much on that PCE index, or number, I should say, which does come out on Friday. The likeliness, I should say, of overvaluation in the stock market was also talked about. Rob made mention of this really yesterday. I saw that as well back in the late 90s when Greenspan said it. And it is obvious. We get this fear of missing out, that last surge, a big push. I understand these companies do well, and that's all fine and dandy. But if you're worried about a economic slowdown, but you're seeing what the markets have done over the last, months and months, there's a disconnect. There becomes a disconnect of we're worried about tariffs and the impact of inflation and what it does to the consumer. But we've got a consumer that is relentless in spending money. And we also have a market that is relentless in moving higher. So that's that kind of a disconnect. So when the Fed comes out and kind of notice these things, their idea is not to basically play the stock market. They're trying to make sure the economy's going to be balanced out. So it becomes, okay, I can see jobs are going to be a little bit tighter. If this tariff impact really is down the road and has it, we got to be ready for it. However, I really can't cut interest rates when we have as active of a economy, I should say, as we do. So it's this weird area. But it's usually the sign of, when you stretch that rubber band, the further you stretch it, the harder it snaps. Something that's going to be super volatile is going to be super hard to anticipate. So I just really want to kind of add to it. Hey, look, once we see corrections, once we see things go around, or fall or confirm, then we can get in there and push some buttons. But past that, don't jump into some of the hype of worries and anticipation. Now, that's about all I've got when it comes to news, because these markets are still the same, right? We're still a +3, -1. I should go 0 on that, but a -1. Just be aware that the correction could come, and it could be pretty aggressive. We can pull back. I'll show you the chart here in a second. Quite a bit. Now, when it comes to the economic stuff, and I decided to just snap this for you because I think this is kind of a better way to see it. And I truly think, folks, if you kind of pay attention, it's kind of in the news. So here's our core retail sales. Now, folks, this is Tuesday of last week. This isn't a small miss. This expected a 0.4. Hey, we're going to be good, and it in line, a little bit lower on the retail sales month over month. Absolute. Now, what is this? Is this a consumer that's just comfortable? They've got jobs. They want to spend money. Is this the last-ditch effort and worried about if I don't buy it now, it's going to be twice as much down the road because of fear of tariff impacts? Probably both. All I know is that is a very, very active consumer. We actually did get an interest rate cut and a small drop in unemployment claims. Now, to be fair, folks, this was higher last week or last month. So it's been back and forth and back and forth. So manufacturing is decreasing. They expected to drop at 5.2, dropped a little bit more, expected at 5.3, pretty much in line. So we're seeing a slowdown. And I talk about, hey, that's that soft landing that we're trying to achieve. So we're getting some numbers that show, hey, there's a little bit of a slowdown going on. But then when you see things like this, it just throws it off. Now, I truly believe that this unemployment claim number will probably be higher because I've seen it go back and forth. But this is, I think, the one that's going to be big. It's the personal consumption expenditures. This measures how much we spend. And I think that's kind of what's keeping this inflation stubborn. So past that, the markets are just the markets, right? The economy-wise, that's the true balance. And I don't know if that's going to have an impact on the overall markets for a little while. And one thing that I want to kind of add to what Rob was talking about, it's like, look, we all know stocks are overvalued. We all know that the markets are all-time highs. It doesn't mean it's time to sell them. It's there. I understand. We can see it. It's obvious. But the motion is pretty directional. But just be ready for some volatility. All right. So with that being said, let's just jump into some trades. If you guys got some, I see you've already typed them up. Let's take a look at what the markets are doing now. Well, there you go. I think everybody heard me, right? So we're sliding a little bit lower. Let's start with the S&P. Now, guys, the first thing that I typed up there, you'll notice that it says they are coming from all-time highs, and even intraday. So the S&P and the Qs, sorry folks, actually did break into new highs, right? Here's the S&P breaking into it on the 22nd. Here we are a couple of days later, and it looks like we're having a little bit of a pullback. Now this could fall really, really hard. I mean, we could correct all the way back down to this level. But since I'm on the topic, let's talk about some of the others. So here's the diamonds. Now, the diamonds didn't really break into new highs and stay there, but take a look at that, folks. That's intraday. That's an intraday high, and that was yesterday. On the 22nd, it really didn't participate, but that's an intraday high. Let's take a look at the Qs. This one, I think, closed up there and set a new one. So here's the Qs. Yep, absolutely closed. New high, new high, new high, and now it's kind of pulling back. Let's take a look at the Russells. The Russells had a pretty aggressive move the last little bit, I'd say over the last week or so, if you guys noticed that. It was cool to see the mid caps, or the small caps doing this, but look at that doji right there on the 17th. Broke out on the 18th, and it's just been pushing back and forth. So they are definitely at their highs, if not intraday highs, but a little bit of a skew so far. So yeah. Nothing's really changed. I think things are just going to get a little bit more volatile. One thing I'll also make mention of is we're seeing a little bit of a flight to, I don't want to say, I guess we could say safety. Let's take a look at our groups here real quick, and you'll see, and it's just been recent. So here's our monthly performance: communication services, technology. Tell me what I don't know, right? Utilities. Technology, energy. Okay, well, technology's still in there, but utilities and energy. And let's take a look at today. Huge push into energy. Consumer cyclical. Utilities, consumer defensive. I mean, day's not done yet, but seeing a little bit of a move from this kind of a risk on, we refer to it in the Forex market, when it comes to aggressive growth and strength, into a risk off, which is a little bit more defensive. So let's just take a look at some of the sectors here. Here's the utility sector. In fact, I think one of the trades, I should say one of my choices, is the energy sector. But look at this. Since I built this class, it's actually pushing above an ascending triangle pattern, right? A tiny one. So good one on the XLU, and then the XLE, which is the one I have on my list for today. Also a pretty big surge to the upside. So whether it's just kind of a hedging off some bets or kind of sliding things from, look, we know we're overextended. Powell even mentioned it. People that listen to him, or maybe just a reaction of like, look, let's take some money out of these higher flyers and put it into something a little bit more safe. And Jazz, thank you right there. Which sectors are the flights to safety, XLU and XLV? He said, yeah, it just depends. Let's take a look at XLV since we're here. It looks like healthcare is not participating yet, but it could be. Now, understand there's all sorts of fun news when it comes to healthcare. I really think the Tylenol thing it's going to put a pretty good dent in, or add a lot of volatility in the sector in general, anything that has the acetaminophen in it. So That's going to have its own problem. I'll steer clear of it. But Jazz, to kind of answer your question, I'm thinking the XLU and the XLE. I mean, it's obvious. Big moves going into it. Now, it doesn't mean that, hey, buy and hold for the rest of your life. We're trend traders. We're traders that follow momentum and movement. These are very good price actions, pretty decent moves. If you want to get specific to stocks, you guys can go through and scan. In fact, if you want me to look at some, you can type them in. But yeah, we're starting to see some things move around. Now look at the markets here. They're sliding lower, normal for a top. However, I can't, I'll say it one more time. Just because it could be doesn't mean it is. And I'll personally, folks, the majority of the time that I've had my longest losing streaks or got damaged the worst was my anticipation trading. Anytime I started to preemptively trade based on my expectations is where I've made my biggest mistakes. Let's get into some trades here, folks. Let me get started. I'm going to go back up to the top here. So Mason's got a couple. I'm going to start with Dino. Dino is on my list again. I carried this over from a couple of weeks ago. We'll do it again, but guess what? Guess what sector it's in? Energy, oil. High base, looks like it's kind of flowing higher. I think it's great. Don't really need to add it because it's already in there. But that's a good idea. Let's move to CLS. Here's CLS, a little bit of a high base going on here. Technology company. It's going to be interesting to see what the sector does. Over the next few days, folks, just follow the tech sector and the communication sector. It's going to be really hard to gauge those little Fab 7s, or Rob called it 11 now because there's a couple more that have been added, because they're going to be so volatile and reactionary. However, if you do something a little bit larger, like the ETF itself, you might get a little bit more out of that. But a little bit of a high base consolidation on this. Here's RKLB, right? Rocket Labs, kind of in a consolidation mode. Kind of a push-pull, more of a sideways. Now, these could break out or break down at any time. So just be aware. This is more of a consolidation, kind of a sideways trade. Let's get to your next one. NTRS. Northern Trust, same idea. This is the financials. Let's take a look at the XLF here afterwards, because I was actually thinking about what the financial sector is doing. I haven't even looked at it today, folks. I've just been busy setting this class up. So we'll take a look at it together. So more of a consolidation, kind of a sideways trade. I've seen a lot of those. By the way, folks, if you've got our list from last week, a lot of them didn't really break down or break out or go anywhere. I did keep all three of the sideways because they're looking good. So I haven't really been rewarded or punished from any of the trades that we've discussed over the last week or so, but they really haven't done much. NTRS seems to be kind of the same. Deere was one I had on the bear watch, and it just never confirmed. It hasn't broke down yet. So it's still there, but it's just not really participating and falling apart. We'll see if it will. If the markets continue to move lower, I would expect this to follow suit. If it doesn't, then we might need to kind of set it aside from the bear watch and find something that actually is participating in bearish movement. Let's look at another one. Here's CMG. Okay, thanks, Mason. These are fun. A little bit of a rollover going on. Sure. Bear rally. Just rolling over, but not really, committing to a direction. I'm still seeing a lot of indecision when it comes to up or down. It's mostly those high flyers that are having this major reaction. I mean, any sort of news. What's the stock today? LAC. I don't know if you guys saw the news on this. Lithium company that was announced that, hey, we could use this company to push, government-funded lithium creation. I mean, 91%. We saw this in Oracle a couple of weeks ago. We were starting to see a whole lot of chase the news, stuff like that. But everything outside of it doesn't really have the volatility that it used to. So if you're going to be making trades, just kind of keep that in mind. Let's go to BJ, last one here. I like this one. Consumer defensive discount stores. This seems to be out of favor. We were looking at DEC, and I'm going to go to DEC next because it just kind of went sideways. But this is rolling over. It's confirming that it's selling off, kind of out of favor. I still think consumer defensive. We might see some of those bigger companies do well if we see a flight to safety versus aggression over the next few days. But I like this one. Let me add that to the bear watch. Okay. Thanks for that, Mason. Let's move over. All right, Dave's got a couple here. Let's take a look at, cool, position we can take a look at. Here's Pony. Technology. Nice little move to the upside. Good breakout here. Thanks for sharing the trade. Let's talk about it. We've got ourselves an October 22 call. All right, so nice. Got a 22 call out of the money. Well, now it's in the money, moving higher. It's just going to kind of follow that up. Wherever your target is on that day, just keep it tight. Good move. You're a little bit overextended, and you look like you're getting some tighter range candles, but guess what? These candles are actually gapping up and staying there. So it's going to be difficult if you're using stops because it might just gap down or gap up again. But where it's at, it looks pretty good. It's a good trade. Let's get to Costco here. Costco, he said, is my worst. Let's see. We've got a 70 call. And it really hasn't broken down yet. So depending on your expiration cycle, let's see, October 10, right? 70 call. Yeah, I mean, I get it. It's a little bit glass half empty. This is a little bit worrisome, right? The gap up, the traded down. It could just be a pullback. But I mean, it's one of those things that by the second week of October, it could be climbing right back up. I know you've got the 70 on it, so it's got a little bit of work to do. But it's still more of a sideways consolidating trade. But yeah, they're just kind of hanging in there. Or excuse me, why am I calling this Costco? Cisco. Geez, folks. Maybe I should read what I'm talking about first. Okay. I apologize. Cisco Systems. But it is kind of that same range. If you could see this start to climb back up, that's great. If you've got stops in there where you're going to pull it, just make sure that you follow your rules. All right, let's get to, XLP. Yeah. Consumer staples doesn't seem to be in favor, right? So the staples are dropping, and you'd figure that staples are actually defensive, but the overall doesn't seem to be doing very well. Gap down here. Let's take a look at, let's take a look at the sector since we're here. So here's XLP. This is the consumer staples. So you think that would be doing pretty good. Let's take a look at XLC, right? Here's our communications. It still looks like it's in a pretty good trend overall, but it is definitely pulling back from that overextended high. So we got that. Let's take a look at XLK. This is the tech side of things. Just a little bit of a pullback, and this is kind of where it's, I really want to stress the fact that we kind of have to follow what's in front of us. This is expected. Both of these sectors were overextended, setting new highs after new highs. I expect a pretty decent correction. So it's one of these things where it's, okay, is this the top? We're going to sell it? No, but we probably don't want to try to buy anything in these sectors as they correct. Let's take a look at, we looked at XLV. Let's take a look at XLRE. Here's one that was interesting. We did have a couple of trades, I think, real estate specific, and they didn't go anywhere. So it looks like this isn't going anywhere either. Right? So kind of a sideways sector going on here. So it's just the extremes. Anything that seems to be, that I'll say it again, that risk on, the technology, the communications, it seems to be kind of being moved out, but it's interesting to see some of that money going back into the energy and utilities. That's a pretty good flight to safety. Let's take a look at gold. Gold's been on a pretty good run for a while. I just like to look at Barrick mining. Gap up, it's starting to pull back. Gold itself has been on a pretty good tear, which once again, that's a flight to safety. We did get an interest rate cut, so we'd expect a little bit of weakness in the dollar. But when the Fed comes out and says that, okay, maybe that's enough, I'd expect a little bit of a pullback, which is kind of what we're seeing today. So it's been a pretty interesting day. I mean, based on what we've seen, it's a very skittish market. It has been for a while. We always take a look at that, folks. When markets make new highs, it doesn't mean that, okay, now we're going to fall apart. It just gets a little skittish. Moving along, let's take a look at SFM. All right, Dave's got something that's in free fall. Sprouts Farmers Market. Just it's where you find them, right? I've never seen this company before, but boy, it's an absolute free fall. You could probably do some research on it and see if it's just, I don't know. It's kind of falling apart. But the question is, short it now. It would be cool to short it now. It's overextended. It's falling apart. So the overall impulse would be absolutely. The only thing is when traders come in to actually cover those shorts, it's going to bounce pretty hard. But you're going to have to let it consolidate and bounce. But I'll tell you what, after that first breath, no matter where it goes, if we could get some sort of established pattern to where it rolls over, yeah, you'll have that chance. Right now, based on how far it's falling and how quickly it is, I imagine the volatility is priced into those options. So if you're trying to do buy puts or something like that, you're not going to get too good of a price for it. You could look for something like a bear call spread. However, when it bounces, it's going to bounce probably pretty hard. So I usually wait for these things to kind of establish a bottom and or a pattern that gives me a little bit of an advantage, meaning at least the volatility goes down so it becomes more cost effective and gives me a little bit more higher probability when it comes to the pattern. But boy, look at that thing fall, huh? All right, let's get into some of our past. I talked about DEC, right? Talking about some of those outliers when it comes to consumers. This is DEC. We had this as sideways. And look at this. It's sideways to down. It was perfect. We talked about this pullback. It had that anemic bounce. I mean, it couldn't get any better for a slow bleed to the -1.0 side. I believe we talked about it somewhere around this area. So a very anemic bounce. Didn't even get back up to that resistance from the gap. It's starting to bleed lower. It's already below this level. So folks, if you've got your iron condor on there, your butterfly, or your -1 trade on it, it's wonderful. And it's still doing pretty well. Most of them are. Most of the sideways we talked about. I've got a couple I remembered, but there's a few that we talked about a couple of weeks ago that are still okay. This is Victoria's Secret, right? Yeah, okay. So it broke out. We were expecting maybe a high base breakout or more of a sideways. And guess what? It looked like it tried to test it, and it didn't. So it's right back up to that level. If you're at a +1 on this or a 0, it's working out great. Still working out really, really well. Let's move over to the XLF. Talked about the financial sector as a possible high base breakout or sideways. Guess what, folks? It looked like it tried a couple times. A little shadow here, here, here. Even yesterday, shadow, but just more of a sideways trade. So it's really, I like it. I like it a lot. So the sideways stuff's working. And it's been difficult because even with this volatility, even with the announcements we've seen, even with, oh geez Louise, folks, lots of stuff has happened over the last week. But a lot of the things don't participate. So you expect a +3 move or a -3 move, and you see the markets react as such, and you'll see one or two stocks have these massive moves. But the overall stuff that we're talking about, folks, still sits in that range of -1 +1. It really does. It's just kind of hard to sit through it. Let me bring over the last trade that we had from last week that actually worked, and this is Colgate. Palm Olive, we talked about this. It had the breakdown, and look what it did. It's great. It's in a little bit of a bounce now. Your -1, -2 trade on that is still working great. It's in a little bit of a bounce, but that's why I like targeted butterflies or vertical spreads, so we can absorb that bounce and take our time and let it go. So that worked out. Another one that I didn't carry over was PayPal, but I wanted to talk about it because it was a bear, and it hasn't broken its pattern. But take a look at that. Confirmation. Came back up, gapped up, and now it looks like it's trying to work its way back down. So sideways, the -1, still in play on that. So I'm seeing all the stuff that we share as a class stay in kind of what it's doing. Everything else is just that noise. And just to kind of add to what Rob said yesterday and what we like to talk about here is there's so much noise at tops and there's so much noise at bottoms. And there's always a reason to do this, that, or the other. I think 2 weeks ago, folks, I said, hey, okay, we got the rate cut that we're expecting. And even saying that, hey, we will cut in the future if needed. And the idea was, okay, it's going to be interesting to see what the markets do with this. I mean, now that you got everything you wanted, what do they do? Well, these are the days that we get to see what the markets do. Looks like a little bit of a corrective action, but it's no different than things we've seen in the past. sure, maybe some political things have changed and some attitudes have changed and some announcements have changed, but it's still the overall price action that we follow. And it's been doing this for quite some time. So I'm just going to play it like we do any other week. I'm going to wait for this correction. There's some bears out there that might trigger that look good. We had a bunch listed yesterday. Today, I'm just going to kind of see where everything goes in my positions and then just add to them. Or I should say, add more bulls or bears based on where we go. So that's about all I got. Let me share the trades here with you. I carried Dino over. It's been with us a couple times. I do like the energy sector. You know what, folks? I like XLU as well. It just depends on which one you prefer. They just seem to be emerging, and it's the overall ETF that I'm focusing on. But truly, if you guys go in there and scan for specific stocks, there's a bunch in there. Sideways stuff. This is exactly from last week. DEC, VSCL, which at Victoria's Secret, and the financial sector. Colgate, BJ, those things look great. As the bears, there's probably more as well. So I'm not doing too much loading up. I'm still going to be pretty selective, but the funny thing is I really haven't changed where I look for up, down, and sideways. I haven't. I've just steered clear of all the news-driven stuff or anything that seems to have too much volatility. Past that, the markets continue to do what they've been doing. All right, guys, that's what I got. Thanks so much for joining me. Appreciate it, and we'll talk to you next time. See you guys.